James, it is a surprise, and it comes at a time when David Jones, while sales was down by 1.7%, what we have been seeing is that they've been clearing inventory. Cyclical conditions do look like they're turning around, and it does look like these cyclical stocks, especially the retailers, coming to an inflection point. Having said that, it is an extremely difficult environment for these retailers. You know, a lot of the international competitors coming on, shops like Topshop as well as Zara, and you've got Uniqlo coming into Australia this year as well. So a lot of competition, still those structural problems remaining, and those department stores doing it especially tough. But in terms of share price performance, David Jones hasn't been doing so badly in 2013. We've seen the stock up by around about 20% on expectations that things are going to get better. There have been tough tackling a warmer winter, but of course coming into spring and summer, hopefully we're going to see some better conditions.
Of David Jones and Myer, with someone like a Kathmandu, you know, some of these more specialty boutique retailers who just continue to really perform exceptionally well.
I think it is a little bit more difficult for those department stores, and that's because of the issue of competition. Kathmandu really does seem to be doing well in its space. There's greater margins in there as well. Whereas with the department stores, what we are seeing is stronger competition. And I guess having a look at David Jones, I look at three different things. First of all, yes, the cyclical conditions are improving. But secondly, we are still seeing a lot more competition coming through. And more competition is going to come into the Australian share market. And whether that's physical stores or online, it does signal a difficult environment, and that high Aussie dollar certainly isn't helping. Yesterday, for the first time in a year, I jumped online, and unfortunately it was another overseas website which got my money. It's just easier to do, it's more attractive to do, and with shipping virtually zero coming to Australia, even from the US or the UK, it just makes sense financially as well as having a greater range. But the last thing to remember with David Jones is its big property portfolio, and one thing that we've seen with these department stores, especially over in the US, is that they have made good takeover targets, especially because of that property component. And often we don't think about that property component to David Jones, but it is quite significant. And at this time of weakness, I'd be keeping an eye open to see whether it could be a takeover target as well.
All right. Moving on to like some other news of the day. That's driving some of the moves into the mining as people continue to see the share price rises, or is it supported by valuations and actual commodity price expectations?
I think it's actually supported by commodity prices and volumes going through at the moment. The big space where we've seen the move is iron ore, where iron ore prices are at $134.40 US a tonne. So if you have a look at the big movers on the market today,
should we wait till Mark Bailey's? Sorry.
Up by a massive 24%. Arium is up by 7%. Don't forget BHP is due to come out with its production report early tomorrow morning. Now this one's going to be a big one. We know that the Port Hedland export numbers have been at a record high, and with the Fortescue production numbers disappointing, it does point to a stellar iron ore result coming through from BHP Billiton tomorrow morning. In terms of copper though, we're expecting to see a flat result. Coal, we're expecting to see a fall, but oil, once again, we're expecting to see some strong growth there. So BHP, the biggest stock in that material sector, should have a good production report coming out tomorrow, and those miners doing well today. On the flip side though, gold was an underperformer. We saw Silver Lake down by about 2.9%. We also saw Alassa Gold down by 2.4%. We also saw Kingsgate down by 1.6%. So it wasn't all of the material space, but certainly those iron ore stocks stand out, and we'll be watching BHP closely tomorrow.